Hey everybody, Drew Brenner here, your mortgage advisor over at Wilbin Mortgage, and I'm coming to you to update you on all the craziness that's been happening in the mortgage market and with the coronavirus. Like I said, it has been absolutely insane around here the last couple of weeks, and really, I don't anticipate that slowing down anytime soon. So let me tell you what's going on, and then I'm also going to finish up by telling you some issues that we're running into on the lending side of things with verifications, with all, again, of this coronavirus stuff going on. So first, let's talk about the market. So as probably most of you have heard, the Fed has cut their federal funds rate back down to near zero. They did say while they were raising the rates over the last couple of years that they were partially doing so that they had the ability to lower them again if we were looking like we were going to run into a recession, which is definitely looking very likely at this point. So yeah, the Fed has decided, in addition to that though, that they're going to be investing a whole lot of money into the Treasury and the mortgage-backed security market, which has done some pretty good things for our rates. Now, we were at absolutely lowest time rates in history about 2 weeks ago, but last week we saw some of the biggest rate spikes in a short period of time, pretty much ever. At least in the 12 years I've been doing this, it was the biggest increase within 2 or 3 days that I've ever seen. Rates literally went up in a lot of cases 0.5 to 0.75% in, like I said, just 2 to 3 days. So it was really, really nuts. Some people missed the boat on the refinance, and we're left hoping the rates come back down. Well, with the Fed's announcement, the mortgage-backed security market has definitely gotten a whole lot better, which is really good for our rates, but we at mortgage companies have not been seeing that big of a decrease in the rates that we're getting quoted by our different lenders or investors that we sell the loans to. And the reason for that is because like pretty much across the board, all lenders are so slammed with refinances that they're basically trying to stem the flow of that a little bit and help get their pipeline more in control. So what they do in cases like that is they'll bump their interest rates up so that lenders stop locking loans with them. That way, again, they can get their pipeline under control, get some of these loans taken care of, purchased, and everything like that. And then at some point, once they're kind of caught up, they'll lower their rates back down because they'll be ready to take on new locks. But again, we are seeing that almost across the board with all the different lenders that we use, and we use a lot of the big ones, that the interest rates just aren't seeing quite as much of the drop as the actual mortgage-backed security market suggests that they should. So it is going to depend on the situation. I'm seeing that purchase loans still have pretty darn good low rates, but refinances are they're definitely keeping those pretty high on the rate side of things. So again, that should come back down over time as they continue to get their pipelines more under control. But this is the most volatile that rates have pretty much ever been in history. So if you're getting quoted on a refinance or a purchase and your rate's still pretty darn low, you're looking in the mid to low threes, I'd suggest probably going ahead and getting locked in, because anything could happen that could decide to send them back up overnight, just like we saw last week. So don't get too greedy. Rates over the last 30 years have averaged significantly higher than where they are right now. They were 6.5% when I started in the mortgage business back in 2008. They were about 5% a year ago. So anything in the threes is really good. I recommend jumping on it. So now let's talk really quick about verification. So something we're running into as businesses close, schools especially, that we're having issues getting verifications of employment back on a lot of our clients' employment. So if you're someone who works for a school especially, or you work for a business that think is going to be closing down or sending people to work from home, I recommend getting some contact information for someone that your lender can contact whenever they need to verify your employment. That way there's no delay to your closing, and you have a good, smooth experience. So if you've got any questions, want to chat about the market, or look into refinancing or purchasing, give me a call. My cell is 214-282-6387. All right, thanks a lot, and take care.